Hey, what's going on, everybody? Been quite a while since I've posted any videos here, especially regarding insurance, but promised you guys a video yesterday. So here we go. State of the insurance market. We've been getting a lot of emails this week about changes that are coming up to the way companies are going to be handling both new business and renewals starting as soon as June 1st. First big thing that is going on right now, and we've seen it happening earlier this year, but several carriers have jumped on this wagon for this coming month, and it may or may not affect renewals, but any new business with carriers, they're going to be doing away with writing 12-month auto policies. It used to be that you'd save a little bit of money if you went with a 12-month policy opposed to a 6-month policy, because the company didn't really have to worry about you shopping for a year per se. I've seen that change over the last year or so, that it's actually been a couple dollars more to lock into a 12-month policy rather than go with a 6-month policy because of the market volatility. They want a little bit extra money up front if something happens during that 12-month period and they decide to take a rate hike, and now that doesn't affect your policy, so they've been collecting a little more on the front end of these 12-month policies. But in large part, it seems these 12-month policies are going to start to go away, at least temporarily, so that the companies have more freedom and more ability to adjust to the market volatility and adjust their rates more often. As you know, we're in an economy that we haven't seen in quite some time. Inflation is incredibly high, meaning that claims payouts for the insurance companies are higher. This is due to supply chain issues, lack of availability of parts, labor costs, rental cars, because your vehicle's spending more time in the shop for a claim waiting for parts. Companies are approving, in some cases, for rental cars to be kept longer. And obviously that means the more money they have to pay for that rental car. Rental car costs have gone up substantially because of the demand for rental cars. They're just not available. So you have those things that are all affecting this. Some things to really look out for in the coming months. I cover insurance and risk management because I've seen what's gone on in the market in the 6 years I've been in the industry now. I've had policies come across my desk that have I'm shocked that somebody would actually write these types of policies that I see. I hear from customers, and this is a big caution if you call in and speak with your agent. There is no magic button to just adjust your price on your insurance policy. It doesn't exist. If your price has changed when you've called your agent or service rep or whoever in your agent's office, if your price changed in that conversation, something in your policy changed. They moved you to a new rating company. Even some of the captive companies, American Family, State Farm, Allstate, etc., some of them have access to other insurance companies outside of their main product. So they may rewrite you over to another company. But I've seen a lot of cases and spoken with a lot of people over the last few years that, we've presented them quotes and they come back and say, oh, I called my old agent and they lowered my price. That just doesn't happen. There's no way that without making changes to your policy that your price can change. The latest one that I had is I had a client come through. Your typical client, median income, homeowner, a couple vehicles, and we put a package together that was the coverage that they needed. And I had actually gotten a copy of their policy and noticed that they did not have uninsured and underinsured motorist coverage on the policy. And when I asked them if they knew they didn't have uninsured and underinsured motorist coverage, the answer was no. They've always thought that they had it. They've seen it on their policy before. Their current deck page did not have uninsured, underinsured motorist. I've had several cases like that, that people thought they had those coverages, or the coverage will be on there, but your liability limit will be what you intended it to be, and then your uninsured, underinsured motorist is set at state minimum. That's a coverage that agents will play with to play with the rate of your policy. And as long as you still have it on the policy, you really don't get notifications of or any signatures required to change that coverage. So it does happen. So I just, again, that's just a caution that don't get me wrong, there are a ton of good agents out there, very honest, but there are the few bad apples that will say they've just pushed a magic button and saved you $50 a month. And that's just not the way insurance works. And honestly, that's not the way we do business here. Obviously, the price and your budget for your insurance protection is important, but that's not the most important thing to us. The most important thing here is advising our clients of the risk that you have, the personal assets that you need to protect, and putting a protection plan together that fully covers that. Ultimately, you choose the levels of coverage that you want to have, but we're going to make sure to have that conversation and advise you, look, here's your total exposure, the dollar amount and your assets that are at risk in the event that you cause an accident, or an event that something happens to you out of the blue. You know, your liability coverage covers what you do. Your uninsured, underinsured motorist protection protects you from everybody else out there on the road. And you know, people are out there driving around with state minimum coverage, which is $25,000 to cover your injuries and $15,000 if they hit your vehicle. And you can't touch a vehicle right now for anything close to that. My brother was going to go thinking about buying a new truck the other day. Called the dealership, saw the MSRP price. Guy at the dealership tells me, hey, before you even drive up here, just so you know that those trucks are going $20,000 over MSRP. They're not leaving the lot under that. It's absolutely insane. I mean, you're talking $100,000 for a truck. So, you know, it's almost more important to protect yourself from everybody else out there than it is to protect your actions, because you can, for the most part, control your actions on the road. You can't control everybody else. So again, rates have been changing pretty consistently for, I'd say, the last year and a half. We've seen some rate decreases last year during COVID when there were less people on the road, less claims happening. Now in the current environment we're in, that's completely changing. Everybody's back on the road, losses are happening, and insurance companies are having to adjust for that. We've seen companies take 30% 6 months ago, and they're taking another 15% increase right now. We've seen companies that were 10% 6 months ago, they're 10% now. But everybody is just steadily increasing. The other thing to quickly talk about is the home insurance market here in Arizona. Real estate market is absolutely insane. Selling prices are at an all-time high. Starting to see some of that settle back down, and projections are that that's going to start to settle back down with the interest rate hike and things like that. But something that we get asked quite a bit is, why is my insurance coverage lower than what I bought my house for? Especially in this market with these inflated selling prices. Some of you may know, a lot of people don't. Your insurance coverage has absolutely nothing to do with what you bought your house for. What you buy your house for is not what it costs to build your house. And your insurance policy is there to rebuild your house to the same type and quality of what your house is. So your house is going to get rebuilt. You're not going to walk away with a $600,000 check. in the bank because your house burned down. There are some policies that will allow you to elect to take the payout instead of having the house rebuilt. A couple companies allow you to do that, but still in that, you're getting what it would cost to rebuild the house, not what you purchased the house for. That's just not the way that works. That being said, again, inflation is affecting all of this. Cost per square foot, way up. Building materials, way up. Your insurance policy needs to be adjusting for those things. The best way to protect yourself from inflation on your home policy is to have what's called guaranteed replacement cost. A couple companies out there are offering that. I have one of the, in my opinion, one of the best home insurance carriers on the market if you can qualify to be insured with them. And their insurance policy reads that they guarantee a rebuild of your house up to $5 million. Absolutely great policy. They are selective in who they insure. You do have to have, a house that's less than 10, 15 years old in most cases. Something over 2,000 square feet that would cost, over $300,000 to rebuild is kind of their sweet spot. But for the newer homes, their rates are absolutely insane. I'm getting policies for 3,500 square foot homes, guaranteed replacement cost with all the bells and whistles on the policy, anything you could possibly think of to cover, and we're talking like $600-700 a year. Policy's absolutely incredible. I've had a couple claims with the company, love them. Claims have gone super smooth. Been incredible there. So I'm happy to help with any of that, or reach out to your current agent and at least have the conversation and see if guaranteed replacement cost is available on your policy. That being said, I'm gonna hop off of here and close this up. Been going for 12 minutes now. A lot of people probably jumped off. I hope not. There's some important information here, but the purpose of this was just, insurance is going to be changing to account for the current environment that we're in, the current economy that we're in. Things are constantly going to be changing. So it is in, I wouldn't say your best interest, but it is a big benefit to you to be insured with an independent broker that has multiple companies that we can shop to make sure that you have the protection that you need for a cost that's within your budget. And we do all that work on our end. You don't have to jump on the phone with 10 different companies to search for rates. You come in the house with an independent agent, and we promise you, our promise to our clients is if your policy goes up more than 10% at renewal, we're going to shop it and see who's going to offer you the best rates at that time. A lot of times it might be advice to stay with the same company that you have because their claims handling is better for a situation that you're in if you're in a higher value home or higher value vehicles, compared to maybe a company that might save you $20 a month, but their claims handling might not be as great. They might not be as familiar with dealing with your type of situation, things like that. So those are also things that we make sure to advise our clients and present the situation as a whole rather than, we're going to save you $20, because saving $20 a month is great. But if you're in an accident and you have a $500,000 claim and you've elected to only have $100,000 of liability coverage, well, guess what? You save $20 a month and now it costs you $400,000. And you have no insurance to cover that. So you're either going to lose the assets you have or you're gonna have to file bankruptcy. It's that simple. So if you haven't had that conversation with your agent, I advise you reach out to me. We can have a discussion. There's no commitments to me being your agent. Honestly, after the conversation, I would hope that you valued that enough to consider that. But if not, you know what? I'm here to help, here to serve, and make sure people have the proper protection that they need to avoid financial ruin. We'll put it that way. So thanks for watching this. If you stuck all the way through, hope you did. And give me a call if you need anything, 480-613-8387.